a lot of people. This is Dennis, and today we're gonna build the balance sheet. Database. That's accounting. It's accounting, and the equation for balance sheet is equal to assets equals liabilities plus owner's equity plus revenue minus expenses. So that's 1, 2, 3, 4, and 5. That's the accounting name, but we're gonna further reduce this. So owner's equity is revenue minus expenses. So we get assets equals liability plus owner's equity, and this owner's equity is equal to R minus E, right? Let's look at it. So that's the that means owner's equity right here is also as assets minus liability is equal to owner's equity, which is revenue minus expenses equals owner's equity. Same concept. And when owner's equity is equal to 0, that's balanced. That's your equity is equal to no gain, no loss. Alright, just same here, but you want your equity to be always greater than 1. That means increase. In this case, we are just looking for asset, the balance of assets, which is liability plus owner's equity. So we just broke it down so that we have equation item 1 is equal to item 2 plus item 3. So we just have this equation, and this further A equals L plus O. You already know what O is, revenue minus expenses. Alright, so this one, the normal balance is debit, and this is credit, and this is credit. So this 2 is credit, and this 1 is debit. This means debit increase assets, credit increase, and this is increase. All right. So also here can have a credit and here can have a debit. Here can have a debit, and that means this is decrease and this is decrease and this is decrease. All right. So the reason why is either increase or decrease is, let's say you have assets equals liability plus owner's equity. Under this, let's say you have cash for your asset, you have note payable or account payable. Plus maybe investments. That is, if I invest $500, plus $500 in my business, my account payable is 0. Therefore I have a cash balance of $500. That is you have this money in your investment account under your owner's equity, and it has moved to your cash account in your assets. An asset is what you own. This is what you owe, and this is the remainder. So you have an equity of 500. If we take 500 from asset minus liability is equal to equity, which is a 500 here, and you take away 0, you didn't pay nothing, your equity is 500. Right, this is it right here. You have it in your equity, but it's under your cash account. That means you have an increase here. You have an you have an increase here and you have a debit here. All right, so it's gonna be investment of debit of 5. This is debit, This is credit. Debit of 5. $500 and the cash. Credit of 500. So this is increase and this is decrease. So you take 500, you own this cash, and your remainder is 500. You get a 0 balance. Right, so this is called, you are balancing it out to see asset of 500 is equal to liability of 0 plus 500 in owner's equity. So you are accounting for all the balances between assets, liability, and owner's equity. This is known as the balance sheet. You have balanced this, and so this is what we're going to be building using Microsoft Access. So let's pay attention to this and get this. Let's create a new and name this balance sheet. Yes. Okay, over here let's look at how we're gonna do this. So we're gonna have first ID and maybe date. So we're gonna have ID 1, 2, 3, 4, 5, at least 5. Date, we're gonna have our assets count here, and we're gonna have debit, credit amount, then we're gonna have the balance, then we're gonna have liability, we're gonna have liability account, we're gonna have debit, credit, then balance, then we can forget the balance, we can forget the balance. We can forget the balance for now and do same to liability, debit, credit, owner's equity, debit, credit. Then we're gonna have the balance. I think it's also good to have the balance. We're gonna have the balance. I keep making decision as I go, so we're gonna have the balance in there some way. So we know asset balance, gonna have the balance, and over here, so this is how it's gonna look, the table is gonna look like. And here it can be assets 1, 2, and 3, right? So let's go to assets. Let's build the assets account. Name this date of issue, account name, normal balance, and let's insert description, insert. Alright, now name this account ID, and save. It go in here, and we put our account in here, cash, advertising, supplies, prepaid, insurance, office equipment, and we save this. Create another table, name this liabilities account, account ID, date of issue, account name, description, no, normal balance. So this one is either debit or credit. Alright, save, yes, and let's issue some accounts. Those payable, accounts payable, unearned